Japanese stocks rose the most in 3 weeks on the back of increased optimism towards the chances of a trade deal between the US and China. This after US President Donald Trump said on Friday a deal is, quote, potentially very close, and according to a report in the Global Times newspaper in China, the two sides are, quote, very close to a Phase 1 deal. Joining me to discuss today is Brock Silvers, Managing Director at Adamas Asset Management in Hong Kong. Brock, good to talk to you as always. Let's just start with a simple one. How close do you think the two sides are towards this Phase 1 deal?
Well, the markets today seem to think that we're pretty close. China has finally moved a little bit on IP matters, and that's been a big sticking point. I'm, however, a bit more pessimistic. I think that if Donald Trump really wanted sort of a little bit of movement on IP, along with major agricultural purchases, he frankly could have had that deal 18 months ago and spared us the trade war. So I'd be surprised if that's the final deal. I'd also note that Donald Trump has also sort of declared premature victory a couple of times now, and markets have been whipsawed. So that's something to keep in mind as we move forward. I'm not quite sure that we're there. If indeed we see a deal before the end of the year along the lines that are currently being publicly discussed, I think that would be a big victory for Team Xi Jinping and not one for Team Donald Trump.
So do you think this is likely to roll into next year?
I think it's almost certain to roll into next year. Even the optimists now are hoping that they can get a Phase 1 deal before the end of the year. I think that's still a little bit too optimistic. And I don't think anyone says that we're close to a more substantial Phase 2 deal. This is simply not an issue that's about to go away.
All right, because I wanted to ask you about that, because I mean, it seems like the chances of a trade, so Phase 1 part of the deal is kind of being discussed, but the Phase 2 doesn't seem to be anywhere on the horizon. So what happens after the first bit is agreed?
Well, we can barely get ourselves to the finish line on Phase 1, so I think Phase 2 must seem very far off into the distance. And Phase 1 isn't really going to deal with any of the substantial issues that caused the U.S. and President Trump to sort of raise the trade issue initially. So it would be quite a surprise if a minor Phase 1 deal was enough to satisfy everyone. It just depends on how much the U.S. is willing to give up in order to get that Phase 1 deal. It certainly seems like China is not going to give up very much.
So in terms of this weekend's elections in Hong Kong, I mean, what does this pro-democracy victory mean within the context of the US-China trade war? Because it kind of seems like Mr. Trump is a bit caught in the middle. On the one side, he wants to stand with the protesters and the democratic cause, but he's also trying to stand with President Xi. So how does that work?
He's certainly caught in the middle, especially now that there's been such a resounding victory. You know, voter participation just went from an old high of 47% to a new high of almost 72%, and 17 of 18 local districts went for the pro-democratic candidate. And that means the numbers, the voting numbers in terms of the essentially city council have gone from maybe 100 out of 452 to about 350 out of 452 represented by pro-Democrats. It's an astounding victory, which just increases the pressure on Donald Trump to sort of side with the pro-Democrats. But I think the trade war is at odds with that, because whereas you would think that the Democratic victory in the election this weekend would be a positive thing, I also think it signals a high likelihood of ongoing social unrest. Beijing and the pro-Democrats are not about to agree on issues like universal suffrage. So that will increase Donald Trump's problem going forward, especially as I don't believe he'll have a substantial trade agreement in place by then.
We've also got to think about the fact that Mr. Trump is gearing up for the US presidential election in November of next year. Surely he's not going to want these trade tensions to roll too far into next autumn.
Correct. And what you're describing is, on various fronts, the Chinese side has significant incentive to sort of let this go. and to not really make tough concessions and see what happens, because not only do you have a U.S. election, but you have a potential U.S. impeachment to create more, more difficulties for President Trump. And as long as the trade deal is unsettled, it creates pressure on Donald Trump to take an easier stance on Hong Kong, which also benefits Beijing. So what we're saying is that on a number of fronts, Beijing really is highly incentivized to just let this roll slowly.
Now, when it comes to markets, what about the Chinese yuan? Do you think dollar yuan will continue to hover around this 7 handle? Because we're kind of just about above this psychological level, having fallen below it in November. That was the first time since August. So what's your kind of outlook for the currency into year end?
Look, if we see a phase 1 deal before the end of the year, that will certainly ease some of Beijing's desire to see further yuan weakening. But remember, we also have the problem of a dramatically slowing Chinese economy. The Chinese downturn certainly hasn't hit bottom. In fact, it seems to be picking up steam. So we've got that issue, which is also having a currency impact. If we see a continuation of economic deterioration in China, along with an implosion of trade talks, then I think the pressure to continue weakening will be extreme. You know, we used to look at 770 as an inviolable barrier, and we no longer do. And now we're sort of looking up to 7+. Who knows? But we're looking up saying, gee, is that really inviolable? If things get bad, we will see some additional weakening, I think.
And what about Chinese stocks? Because it seems as though momentum has broadly been with the bears since those peaks in September, but we are starting to see a little bit more optimism come through. Do you think we're past the lows, and where do we head in towards the end of the year?
No, I think it's too early. Look, we're still in a situation where the economy is slowing, domestic demand is quite weak, global demand is quite weak, and that's not going to change even if we see a trade deal. So given the overall weakness, along with the potential for currency weakening, I just think, a standard top-down China allocation would make no sense to me. Maybe some traditional bottom-up stock-picking strategies would work, but that requires investors to have a particular conviction, a very specific and particular conviction. Absent that, I think investors are still probably better off keeping their China powder dry into the first quarter.
Brock, thank you so much for your time as always.
Great to be here.
That was Brock Silvers, Managing Director at Adamas Asset Management, joining us from Hong Kong. I'm Victoria Scholar, and thank you for watching IGTV.